Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 10th of July, 2018. We're about 4:43 p.m. Central Daylight Time. Knocking on the door of a key number of 2,800 to a lot of analysts in the S&P. I thought the market would run for it today. It did go up late in the day for the high. It didn't do that. Maybe it's saving it for the morning. And the reason is you're going to get earnings. They're probably going to be strong. People are looking for 20% plus on average in the S&P. Yeah, that's a big number. But remember, you got tax breaks in there. You got a lot of things going on into that mix. Without it, maybe you get 10, 11% in some of the companies. But that's still the strength. So you're getting a little rotation out of the Russell, but the other's strong. Metal markets just don't have a story. That's the problem. Yeah, you'll get short covering from time to time, but there's no story there. In the foreign currencies, pretty much sideways action. And it looks to me like we're going to give up some of the action in the bonds and the notes as the markets want to slip back. If we can move this cursor, please, over. Now, in looking at the market, I've taken off for the S&P, the Fibonacci, which was going from this high to this low. Why did I do that? I did it because the market had made a 62% correction, got back under 50, and it's back up here. I can always put it back on, but it appears to me that the validity of that is going to be thrown out the window. We've got this thrust to the upside. No, the market isn't back at the highs it started the 2018 year at right at the beginning, but it's certainly a good run. And you can see how the market just picked itself up again right into this resistance area that we're talking about, and that's why this seems to be an area of importance to a lot of the technicians. We have a clear pattern of higher lows, with the most recent low being 27.1075 straight on up here. We've got the pattern where we're into the resistance, as you can see, and under the key moving average. Let me say it right. The key moving averages are under the market, and everything's lined up bullish. What do I mean by that? You've got the shortest term average, the 18-day in red, over the 100-day, and the 100-day is over this gray line, the 200-day. I just didn't want to write that on there. Too much writing sometime. In Bollinger Bands, I'm expecting the resistance around the 2810 level where it's at right now. That'll probably go up a little tonight because of how the formula is calculated. We'll see what it does, but in other words, I'm still looking at this market in this upthrust. Admittedly, it's bullish. Admittedly, it's overbought as can be. And that is the dilemma that's going to face traders the rest of the week as they position themselves for these earnings reports. We had some from PepsiCo today. We get the big banks, 3 of them coming out on Friday, so it'll be interesting there too. Then we get the tech companies. You got Netflix, everything else coming out. Higher lows, higher highs in the NASDAQ. Same thing, overbought. Is it going to challenge the highs that it had? That's the difference on this chart. It's still looking quite bullish, though. When you come into the Dow, you know, my mother keeps telling me, and yes, she's in her 90s, well, she looks at the Dow. She thinks that's the stock market, and she's going, that Dow's not where it should have been. You know, as they get older, they look at their investments, and I'm trying to explain to her the other indices are doing the job, but people watch the Dow. But the Dow is looking at what we call this back and forth action between the 18-day average getting under the 100, and you can see that right now. It's still under it. The market making a run possibly at the 25,215 level or falling back into support of those numbers. There's a constant theme. Every one of the indices you're looking at, including the Russell, are overbought. And if you're a momentum follower, you either embed or overbought puts on to some people a warning sign. Now, you had a big reversal day to the downside in the Russell today. You had one back here the same way, and that started this thrust down. Is that the beginning of the same type of play? Don't know, but it's something that I point out on the chart. In the VIX, if the market falls further, I would expect down against this lower Bollinger Band to see strategies of writing puts take place against that, trying to get back up from there about 3.5 points back to the 1440 area, the 18-day average of closes. In the bonds, you had an embedded reading which has been lost. Now, if you take a look, you lost it right through here. And when that happens, I look for price in the 18-day average to come together. Now, the 3-year auction went today, and it was not a stellar grading. Traders are still looking for more yield, which is putting up the yield on the 10-year notes and other markets to attract the buyers to the market. So this falling down is a bit of a yield hike in the market. And as you can see, the 10-year note, well, it's knocking right on the door of hitting that 18-day average of closes, which is what, when you lost any idea here of embedded, the market would have come down and calling for that. In TLT, you were just overbought. I don't believe that this market was embedded, but we can check it. Both numbers are not over 80 here. They were there. That's one of the days. They were here, that's 2 days. And they were here, that's 3. When you lose 3, when you have 3, you're embedded. When you lose the reading from there, prices often make a run at the 18-day average of closes. So what I'm saying is I will not be surprised in any manner if you fall back to there. Now, to get back to this number, you're going to come right in against the last break low of 121.29. Admittedly, this 18-day average is going to go up a fraction tonight. Each day it's been going up a few points, as you can see. So I would expect it's going to go up tonight. Momentum has got a divergence here. It is saying price, momentum is turned down, and that often leads prices itself. In the dollar index, as you can see, you're making a stand or trying to make a stand at the 18-day average of closes, and you're narrowing in the Bollinger Bands. This gets exciting. This is exactly what I keep my eye on, because out of this comes trends, especially if it can still spin around in there for a little bit. In the euro, you've been in an uptrend that's run into the resistance at the upper Bollinger Band in an overbought condition. So I keep my eye on that. We'll see if, by the way, in the stock indices, if they get up towards the Bollinger Band overbought. What does that do? In the British pound, I'm impressed. And the reason I'm impressed is really there's been a lot of bearish news on the British pound, ministers disappearing and so on, and this market's holding. It's acting like a market that is building a base, not trying to build a top at this point in time. In the Japanese yen, I see this as bearish. Yes, it's riding the lower Bollinger Band again. Momentum down, both numbers under 20 on the close with the trend down. This market still looks to me like against the dollar, especially. It still wants to work lower. And a market that gave up on the rally today was Bitcoin. You've got lower highs, lower lows, momentum now starting to turn down, outside day down as well in the market. So until you take out today's high, you've really put a, if you will, the fix in, as I like to call it, where you've run out of your upside pricing. In the Brent versus WTI crude, and this is looking at both September contracts. You've gone from 11.35 to 5.54, getting a little bit of a bounce in the difference. Now remember, something's going to happen soon. The Canadian oil, we're losing, I think, about 300,000 barrels a day. I think it's called Syntec is the name of the refinery. That's going to come back online sometime, be at the end of July or August. And when that comes on, the U.S. is going to get more crude. So right now we're getting draws. I saw that on the API number, we took down the supplies of just crude, 6.8 million barrels. We did 4.5 last week, and then the EIA came out the next day and said, no, you didn't. We only see a 1.2 million barrel draw. I'm expecting that everything sort of gets in line with the EIA joining in. I'm looking for a good draw number tomorrow out of that. We'll see if it happens or not. In the Brent itself, the market's got lower highs and all of a sudden a higher low. Do you see what went on? Lower low and a higher high. Stepping away from a trend there. You don't have a trend in the WTI. You've had the lower low, higher high. But what do you have? The power of this chart is right here. You have the bullish embedded reading. Very, very strong. Until you lose that, I remain in the bull camp in the market. In the gasoline, you're still climbing in this market, which still strength galore. You're going up against the upper Bollinger Band. You missed it by about 80 points. That's the objective if it can continue climbing. If we look at the momentum here, both numbers are over 80. They were not the day before. You're just overbought, knocking on that upper number. And in the gas and the natural gas, it looks to me like you've got a bear market underway again. You're embedding the readings. You're riding the lower Bollinger Band. There's nothing friendly on this, and the cooler temps that have been coming in on the East Coast especially are not drawing the demand that you would have thought you were getting from this. So something important to be keeping in the back of your mind. Now, our good friends at Modern Trader, their new issue is out, and as you can see, in fact, I'll start this again so you get to see what the current issue looks like. And here you are, Trade Wars, what's going on. If you don't get their magazine, you should. Number one, it's great for what the products are. Be it options, FX trading, futures markets trading, spreads, trade ideas, it's all jam-packed in here. It's a magazine for traders, but not written for you, as I like to call it, you junkies that are mathematicians. There's another magazine for that I think is phenomenal too, Stocks and Options, and maybe that one. This one I love for the trading ideas that I understand, which I guess is different than a lot of people. In any case, they also give you the daily market focus, which is your day-to-day stories, and then you get your others on the monthly basis in the magazine. It's a $79 a year value. It's free through us, through them. Give a call. Go to our website. You can sign up for it or click up here at any point. It'll take you right to the sign-up page for all our offers. Choose what you'd like. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.